Chinese products are everywhere, but recently China's economy has slowed down and the world is panicking. Are these Chinese goods that we buy about to get more expensive? Are they becoming cheaper? Or are they going to be around for us to buy at all? We're about to find out. China's main economic objective has been to increase trade and industrialization, and they have done so spectacularly. But in the last 5 years, their earlier ideas have been backfiring. About 40 years ago, China's population exploded, and this created a huge burden on their resources. The government solution was the one-child policy. Fast forward to 2016, and a huge chunk of their population is over 60, leading to a significantly smaller workforce. In 2008, China was hit with a devastating earthquake that left 11 million people homeless. And so the government concentrated their resources into welfare housing projects and encouraged everyone to do the same. But an oversupply of housing drove down property prices, resulting in massive losses. To divert funds from the failing property market, the government hyped up their stock market. This plan worked a little too well. The public saw this as an opportunity to make quick cash, and before the country knew what was happening, their stock market had more money than it knew what to do with. It became overvalued, it crashed, and it continued to crash. Overnight, people lost their entire life savings and their backup plans. When China lost this astronomical sum of money, it became difficult for them to buy raw materials. This made it hard for them to manufacture products, creating even bigger problems for their already struggling economy. All these decisions haven't affected China alone, for when the world's second largest economy is in danger, everyone is bound to feel the crunch. Because of how closely linked China is to the world economy, this has created a two-way problem. Since China has no money to import raw materials, economies that depend on exporting to China have suffered losses. And since China has no raw materials to manufacture products, economies that depend on importing from them have faced massive deficits. Thanks to this situation, Brazil is facing an economic recession and a political uprising, and one of Japan's biggest industries has taken an enormous hit, and these are just two examples. On the other hand, emerging markets with favorable conditions are hoping to take advantage of the huge trade vacuum created by China's economic instability, and we may well see products with Made in India or Made in Indonesia soon. But trade giant China is not taking this lying down. They've devalued their currency in an effort to bring back their competitive edge. As you can see, even super economies can create super blunders. And whether we like it or not, the global market is slowly changing.